significant is it when a refining company, a company that has made money off of refining for years, gets out of the refining business? Well, that's what's happening with Hess, and I'm here with Dan Dicker. So Dan, this is a pretty significant move that they're making, right?
It is significant. I mean, the Hess refining assets are from my youth, going through New Jersey. I mean, they covered the East Coast. Been a very, very famous company for their refining assets, and of course, they are following the lead of other big integrated companies. For example, Marathon, which spun off their refining assets into Marathon Petroleum. ConocoPhillips obviously did it with Phillips 66, but they've also decided to get out of the refining business. And this is the trend that's going on in the big integrated companies, and that's what's most important about what's happening to Hess, despite the fact that obviously their stock has made a tremendous run over the last month or so.
Right. When we look at the chart of the stock, we did see that the market loved this decision for them to get out of refinery.
Yeah, not just the decision for them to get out of refining, but obviously for Paul Singer from Elliott Associates to start making an icon type kind of bet, looking for another $800 million in shares, a couple of board seats. Now you get some sort of speculation that maybe they want to position Hess for a sale, which I don't think will happen. But in any event, you got a lot of nice froth going on with the stock right here, and it's traveled a long way.
So they're obviously doing this for a reason, to get some money. What are they going to do with that money?
That's exactly right. They free up $1 billion. What's important about that is that they can pour it all towards E&P, just like Conoco is doing and just like Marathon is doing. Because what the majors are saying with these kinds of moves, they're saying, we believe the refining business can be good for a certain period. It can be good for 2, 3, 4, 5 years at a clip. Phillips 66 proved that. They've had a tremendous run. Marathon Petroleum, CVI's had a tremendous, I mean, they've all had these tremendous, Valero, Tesoro. The last 2 years have been fabulous for the refiners. But the majors think that this is a fickle business. What's not going to be a fickle business, clearly, is crude production over the next several years. They're basically betting on a crude price that's high and higher, not low and high, but here and higher up from here. And that production, the way that they can build it, is the best way for profitability over the long haul.
All right, the most recent oil prices we saw already going up, already around 97. So where do we go from here?
Yeah, we've seen the lows for 2013. That's my bet. I've said it on air and here a couple times, and it's only bounded on the upside by what we see geopolitically, and now with Algeria and what's going on in Iraq. I mean, you never know. Iran, those numbers can always get better. So what you want to do as an investor is find those companies that are growing their volumes in the greatest potential spots around the globe. And that, to me, is not Hess, for example, and it's not Conoco. But to me, a company like Noble Energy, particularly, both here in the United States and abroad, Anadarko, I think, is doing a tremendous job, and EOG. Those are the three I would look at.
All right, so take a look at those names and really pay attention to this move that Hess has made, because it's really significant of where these oil companies think oil is going. And like Dan said, those are the names you need to keep your eye on.